Family, what's up? Wasn't today a beautiful day? Look at that. We opened up right around up in Chill and just climbed. What an amazing day. But that's not why we're here today. We're here today because I have somebody in the community that needs a little extra help with understanding RTH gaps. So I'm going to try to make this a relatively short video, but if you already understand RTH gaps, you don't even need to watch this video. So first of all, this is a NASDAQ futures chart, and NASDAQ trades 23 hours a day. And from the time it closes at the New York market at around 5 o'clock on one day, it'll open up the next day at New York will open up at um 9:30. 9:30. So regular trading hours, a gap is the time between that window. So you'll only see the regular trading hours gap if you're on a lower time frame. Like if you do it on a daily chart, you won't see it. So if you go down here in the bottom corner and go to regular trading hours, you'll see that all of a sudden you got a ginormous gap, for example, for today. So what happened yesterday is we closed here. This candle closes at like 4:15. But the futures market does go until 5, but this candle right here, look, you can even go to the 1 minute chart. It's still gonna be zoom in so we make sure we got it right. This last candle yesterday closed right there. So 4:15. But technically the market doesn't close until 5 and then it reopens at 6. So then you go to the top of the gap, and this is where we opened today. We opened here at 9:30. See the time down here? 9:30. So you don't mark it here because that's not where the candle mark opened. It opened there. So that's why you mark it there. So basically, that is your regular trading hours gap. It means there's a gap between the regular trading hours of the New York session. So this is a gap. And oftentimes what you'll see is, depending on what's going on in the market, you'll see the gap fill and then go in one direction, or fill and keep dropping, or come to 25% and go up, or come to 50% and go up, or come to 25%, go up, and then come down to 50%. You know what I mean? But price will just, hang around in this gap or fill it, just depends on what's going on with price action. So basically, once you mark your gap, the only time you need to be on this regular trading, well, this is what I believe. The only time you need to be on this regular trading hours gap uh, format is when you're marking the gap. Once you mark the gap, then you just go back to regular trading hours because you want to know all of this price action that happened within this gap. So there's the gap between those two green lines. And so, for example, if you just, all you have to do is look back through the chart and you can see how price reacted with gaps, even if you want to back test gaps, like how many times do they feel? I'm gonna put this on a little higher time frame so the candles can be a little bigger. When do they feel? So like this was, oh, it's not. Oh, look, we gapped all the way up there. I'm like, what happened? Um, so like on we closed here on Monday and then opened here on Tuesday, and then price came down into like 50% of the gap. And you could look at it if you just put the fib at the open up there and at the close down there, and you'll see that, price dropped down into the gap at 50%, worked its way up, came back down, bounced off 50%, went up, ran some liquidity, came back down, bounced off the 618. And then next day it was on and papping. Like even this gap, here was a gap right here. Like price came into it, but it was just too heavy that day. So it came back down. You could just go back and look through wherever you see like a gap in the chart here. Price came up, dipped down in the gap, worked its way up, climbed its way up, then had a little retracement, then went up, then had a little gap up, and then it chopped a little bit and then ultimately came down, filled the gap. So, you treat the gap the way you like if you're a gap trader, the same way you would just treat any gap. And then like for example, you want to go and just be aware of them because let me see if I can put this on the hourly chart so we can. There's a ginormous gap up here, right here. It's like a 300-point gap. If you remember, we ran down, what was it, like the end of July? Mid-July. Like this gap right here is a whole, like 3 point, let me see, we closed there and opened there. It's like a 300-point gap. So you want to have this on your chart because when we start working our way up there, we're gonna be filling a gap. You want to be a part of that gap. I know I do. And so look how close we are to it now. So that is all that I want. And look at that. Isn't that interesting? How price went up, just ran up today and then came right back down. Wow, look at that. Look at that. Came right back down to the gap. And we were looking at this, I was like, I know this sucker is not about to drop at the end of the market and come down through this gap. And this gap right here is a whole, look at this. We closed there. There's a whole 400-point gap. Isn't it beautiful? So, yeah. So you want to make sure you have the gaps on your chart and trade them accordingly. This is, what is this? This is the let me see. What is this? Monday? Did we gap up like that during electronic trading hours on Monday? Good God. I hope I didn't point that out as a regular trading hours gap. I probably did. I didn't know we had that gap like that. That's crazy. That's crazy. I guess so. Let me mark that. Look, it got me. Oops. Look at that. We didn't have a holiday this week or nothing. This is a daily chart. Wow, I didn't even realize we gapped up like that. Oh, this is a contract because we had a contract. Yeah, okay. I'm just like, what in the world? Yeah, well, we had a contract change. We switched from September. We switched from September to December contract. That's what that gap is. Okay. All right. So that's it. If I missed anything or that you think is important about a regular trading hours gap, say something in the comments. But otherwise, I hope this helps people who need to understand a regular trading hours gap and what it is and how to market. And I don't know if I mentioned, like, I think I did, I can't even remember, y'all. Forgive me. You can mark it on the 5-minute chart, and then if you want to refine it or double check it, just go to the 1-minute chart and just double check it. So that one looks good. You can zoom in on it. That's good. And then look at this one. And yeah, I must have looked that up this already because I think at first it was off a little bit. Okay, that's it. Love you lots. Be cool. Always stay in trading school and make that money, honey. Bye.